So what's Bitcoin going to be worth in 2026? It's such a simple question, but man, the answer is anything but. Seriously, ask 3 experts and you're going to get 3 wildly different numbers. Today, we're going to dig into why that is and unpack the powerful forces pulling these predictions in completely opposite directions.
Okay, let's just jump right in. I mean, just look at this range. It's huge. On one side, you have the bears, who think Bitcoin could actually drop below $100,000. Then, in the middle, you've got this more moderate view, kind of hovering around 150. And then, you've got the super bulls talking about a price way over $250,000. We're talking about a potential spread of hundreds of thousands of dollars for the exact same asset. It's wild.
And this brings us to the big mystery, right? How can really sharp people, looking at the exact same data, come to such dramatically different conclusions? This isn't just random guessing. There are powerful logical arguments on all sides. So let's try to step into their shoes for a bit, both the bulls and the bears, to really get a feel for their logic.
All right, first up, let's talk about the optimists. To understand how someone even gets to a number north of $250,000, you've got to look beyond just Bitcoin itself. You have to look at some of the massive shifts happening in the global economy.
A huge voice in this camp is Robert Kiyosaki, the author of Rich Dad, Poor Dad. His whole argument is built on this idea that people are losing faith in traditional finance, in governments, in central banks, in regular old currencies, and that's pushing them to look for alternatives. For him, Bitcoin isn't just an investment, it's like a lifeboat in what he sees as a failing system.
And that whole philosophy, it leads him right to this number. Kiyosaki has put a stake in the ground, predicting that Bitcoin could hit a staggering $250,000 by 2026. Now, that's not just a number pulled out of a hat. It represents a belief that a massive wave of money is going to come flooding in, looking for a safe place to land outside of that old financial world.
But look, this bullish case isn't just based on a feeling. It's fueled by some really concrete market drivers. That distrust Kiyosaki talks about, that creates real demand for alternatives. On top of that, the new Bitcoin ETFs have basically opened the floodgates for big institutional money to pour in. You combine that with more and more companies and regular people adopting it, and well, you've got a pretty powerful recipe for the price to go up.
But for every bull, there's always a bear, right? So let's flip the coin and see how the other side is building a totally different picture. The skeptics are looking at the exact same landscape, but they're spotting some major risks that they think could send the price tumbling in the other direction. You've got guys like Peter Schiff, who's been a longtime Bitcoin skeptic, representing this more cautious view. They're warning that the very thing the bulls are celebrating, all that institutional money coming in, could actually be its biggest weakness. I mean, what happens if those big players suddenly decide they want out?
And this thinking leads them to a starkly different price target. The bearish case sees Bitcoin really struggling to keep its momentum, with a very real possibility it could drop below that psychologically important $100,000 mark, maybe even down to around $90,000.
So the key point for the bears is all about institutional risk. Think about it. You have a company like MicroStrategy holding a massive amount of Bitcoin. What if they run into financial trouble and are forced to sell off their holdings? That could trigger a domino effect, a cascade of selling. The entry of these big players has definitely increased demand, no doubt, but it's also introduced a totally new kind of volatility and the risk of some really severe market corrections.
So we have 2 completely opposite visions for the future. How can that even be? Well, the reason for this massive gap isn't that one side is brilliant and the other is clueless. It's really about which external forces you believe will be the most powerful. So let's break down the 4 key forces that every single one of these analysts is watching. This right here gets to the absolute heart of it. You see, Bitcoin doesn't exist in a bubble. Its price is the result of a constant tug-of-war between these powerful external forces. And this entire prediction puzzle really just boils down to one question. Which of these forces is going to pull the hardest between now and 2026?
First up, the big picture stuff, the macroeconomic environment. If inflation stays high, the argument for Bitcoin as a safe haven gets a lot stronger, right? Especially for an asset that has a fixed supply and can't just be printed into oblivion. But on the flip side, if interest rates rise and money gets tighter, riskier assets like Bitcoin could take a pretty big hit.
Second is institutional adoption. And man, this is the ultimate double-edged sword. More corporate and ETF buying power can absolutely drive the price to new highs, but, like we just talked about, it also concentrates a lot of risk and creates the potential for massive sell-offs if just a few of those big players change their minds.
Third, and this one is a huge wild card, is regulation. For a global, borderless asset like Bitcoin, this is super complex. A government crackdown in a major country could seriously put the brakes on growth. But clear, favorable rules could give people more certainty and accelerate mainstream adoption even faster. It's a total toss-up.
And finally, there's Bitcoin's own internal clock, the halving cycle. This is a pre-programmed event that cuts the new supply of Bitcoin in half, and it happens roughly every 4 years. The next one's around 2028. That puts 2026 smack dab in the middle of a cycle. Now, historically, that could be a time for a new peak, but it could just as easily be a period of correction.
Okay, let's take a breath. We've covered the bulls, the bears, and all these complex forces they're trying to weigh. So, what does it all mean for you? Let's try to boil this all down to the final takeaway.
This table is a great way to see it all in one place. You've got Kiyosaki's super bullish 250 target, which is all about distrust in traditional money. You see the bearish view, way down below 100K, focused on that institutional risk. And then you have these other models, technical analysis pointing to around 142, and platforms like CoinCodex suggesting a more moderate 130.
But here's what's really interesting. While the extreme predictions, the highest highs and the lowest lows, get all the headlines, most of the forecasts are actually clustering somewhere in the middle. This range, from about 130,000 to 200,000, seems to represent a kind of cautious optimism. It's an acknowledgement of Bitcoin's huge potential, but balanced with an awareness of those very real risks.
So it all really boils down to this fundamental clash of philosophies, doesn't it? Are you in the camp that sees Bitcoin as an essential hedge, a protection against a failing financial system, or do you see it as a highly volatile asset that's primarily defined by its risk of major corrections? Your answer to that question is probably going to determine which of these price predictions feels the most real to you.
Ultimately, the path to 2026 isn't written in stone. It's going to be forged in the fire of this battle between competing forces. So the question I want to leave you with is this. In the tug-of-war between the powerful push for mainstream adoption and the immense pull of regulation and market volatility, which side is going to win? The answer to that is what will finally solve this prediction puzzle.
Please like and subscribe for more trading content, and then subscribe for more daily, weekly trading insights.